Hey everyone, thanks so much for joining the Think Realty podcast today. I'm Eddie Wilson, the CEO and founder of Think Realty, and avid real estate investor, and I can't wait to have a conversation with you, but with other people involved, and we've got a special guest today. Before we get to the guest, I want to say a quick thank you to Real Property Management. This episode is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to ensure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. Many of you know that real estate investors, as you are, I believe, real estate investors, oftentimes get a bad name. They get a bad rap. And the reason is because they're taking properties and oftentimes they're taking properties and they're reperforming properties. And when they're taking these properties, oftentimes it's from a distressed seller. The guest today has actually reverse engineered this entire process to make sure that he's solving problems with creating housing, affordable housing, so on and so forth, with opportunities in about 10 different markets around the country. So let's welcome to the show Atticus LeBlanc. Thank you so much for joining us today. How are you today?
Doing great, Eddie. Thank you for the opportunity. Appreciate it.
Very good. Fellow Atlantan here in my backyard, so it's really good to speak to you today.
Well, thank you. Again, really appreciate it. And I should say I was born and bred in New Orleans, so I'm still a Saints fan, even though I've been in Atlanta more than 20 years now.
Yeah, well, I completely understand it. I'm a Browns fan, grew up in Ohio, so I get it. Living in the city, but not necessarily cheering for the Falcons. So
it's healthier that way.
It is. That's definitely true. But I am a Browns fan, so I don't know how much healthier. But anyways, tell me about Padsplit. So Padsplit is a company that you founded. And I think it's got a phenomenal mission. I think it's re-architecting the way that I think the industry will see real estate investment. If you don't mind, just give us a brief overview.
Sure. Yeah. I mean, as a longtime investor myself, I've been a real estate investor for 17 years now. And the idea was, look, if you want to create more affordable housing, the best way to do that is to make it more profitable than whatever the alternatives that other investors have. And so that's ultimately what we did through a co-living or a shared housing model. And in all my years in single family and multifamily real estate investing and managing, I acknowledged that there were a lot of specific tasks and operational efficiencies that we needed to address as a services company or as a technology marketplace to make this shared housing business look and feel much more similar to a traditional rental mindset, or the way that any landlord or housing provider would typically operate. And so what we do is handle individual contracts for separate bedrooms inside the same home, single family or multifamily. Those individuals get to access homes that are all inclusive of furnishings, utilities, Wi-Fi, laundry, for one set rate that doesn't fluctuate over time, and is usually on either charged weekly or based on a customized pay period. They get paid every second Tuesday. And what that really means is it makes it much more likely that those individuals pay, which means that we can both create a overall housing rate that is much more affordable than anything else on the market in any market, as well as just much easier to budget around. And at the same time, by billing each of those separate bedrooms, it means that the vacancy of the home is much lower over a period of time. The renovation and turn cost between residents is lower over time. And the real cash flow on average is about 2x for our investors. We have about 120 individual landlords on the platform right now. But yeah, they've been earning about 2x compared to what they would have as a traditional single family rental. And at the same time, these rooms cost less than 50% of a comparable one bedroom or studio apartment. in the communities that they're in, and even less than an extended stay motel room.
Yeah.
So it's really a double bottom line company trying to make housing both more affordable and more profitable simultaneously. Doing good, doing well.
That's awesome. I love the model because you're solving multiple problems at once, right? In a market that's gotten so hot, I mean, real estate is an unprecedented highs still, even though that people are saying we're plateauing. But a lot of the issues, and think Realty and another company that I'm the leader of, the American Association of Private Lenders, we spend a lot of time in D.C. And one of the problems that they're trying to solve nationwide is affordable housing, as you know.
Sure.
And there's really not a lot of good solutions. There's 6 million. There's a demand of we're underbuilt. Close to 6 million homes in America.
Yeah.
And the problem is even if you built 6 million homes. And you fulfilled that demand, it doesn't mean that they're actually affordable. People can't necessarily just jump into a new home or purchase it. And so then we're building massive apartment buildings, but then those are all Class A, and then the rents are at the highest level. And so we're exponentially increasing our problem in the country. And I really believe that this is one of the first solutions. I've seen a lot of people trying to do tiny homes or trying to do mobile homes on land or trying to solve this problem. But this one seems to be a pretty pragmatic approach. I mean, it's like, hey, I've got a house that's got 3 or 4 bedrooms, and I'm going to rent it out per bedroom based on what this person can afford. Now, so I want to talk about both sides, right? Let's talk about it from the renter angle first, the actual occupant of the home. So they have an individual lease on their room, and it's a shared space. And do you provide any type of security mechanisms, for them as they're coming in? Does every door have a lock? Does every door, is it a shared bathroom? I mean, how does it work for the actual tenant?
Sure. So the short answer is it depends on the host. I mean, much like Airbnb, different properties are set up differently, and we provide guidelines and brand standards that are actually based on HUD minimums. And then we increase some of those for fire safety and protection as well. But each host really has their own business model that they put forth, and different hosts have different spins that they like to put on it. But for the resident coming in, as we survey our residents and prospective residents, the thing that they're looking for more than anything is 1, flexibility, and 2, affordability. Flexibility surprises a lot of people, and just for us, the security aspect is important. It's just base case building trust, but being able to do that in a way that gets them into housing very quickly as well. So the way that it operates functionally is typically people have a smart lock on the exterior of the property, and the code to that smart lock is generated by our system ordinarily as soon as they book the room, and it is theirs and theirs alone. So every person in the home has their own specific user ID that gets them into the property, and then depending on the host, the doors inside the home could have electronic locks. They could have mechanical push button locks. They could have traditional key locks. That's really depends on what the business model of that individual host happens to be. But the most important thing for us is that when residents come, or prospective residents come to the site, they apply to become a member of Padsplit, and that means that they're passing a background check. It means that we are verifying their identity, we are verifying their income and employment, and then we're looking for evictions in past history as well. We're pulling credit information, but what we found, there's really no correlation between their credit score and their payment, believe it or not. And so we've been testing a lot of the traditional hypotheses that landlords have had for decades, and really running those hypotheses against the data to determine, hey, where do we need to play, and how can we add value and access this portion of the population that comprises over 1/3 of the entire rental population of the U.S. and give them access to these affordable rooms very, very quickly with very few barriers to entry. Because the name of the game and our primary value prop for anyone to be able to get better returns for investors is that we have to fill rooms very quickly. We have to keep them filled, and keep people paying on time.
Yeah,
So everything that we do is really based around meeting those objectives and building trust within the broader ecosystem. But yeah, the specifics within each home are still very much left up to the host, and different folks have different strategies that they want to put forth. And we're continuing to iterate on the technology to be able to add more flexibility there for hosts, whether they want to cater to students or traveling nurses or, I don't know, farmers or whomever. Yeah. And yeah, it's a big part of our value proposition.
That's awesome. So kind of talking about the renter side, let's talk about the investor side. So this obviously makes sense for a lot of different areas, like you just said. I mean, it could be student housing, it could be, just transient professionals like you were talking about. It could be pilots. The airline industry right now is highly transient. It could be nurses or the medical profession. But if I'm a landlord, let's say, and I am, I've got a lot of doors across the country in multiple markets. How do I identify if one of my houses makes sense for a platform like this? I mean, obviously, the 2x return sounds fantastic. The thought of increasing my output, and especially on properties that maybe aren't performing like I thought they would when I first purchased. Maybe the cash flow isn't up to what I thought it would be. How do I identify what makes sense for one?
Sure. Yeah, I mean, the first thing you think about is inefficiency. And in your rental portfolio, I'd ask, like, how much do you get for formal dining rooms right now on a per square foot basis, right? I mean, they're effectively worthless.
Yeah.
And so the first question to ask is, how much inefficient use of space do you have in those homes? And might those homes be close to centers of employment? Because if we acknowledge, I mean, it's on the front page of every newspaper in the country, that workers can't afford housing, period. Right? I mean, you look in Atlanta, where metro area average studio rent is $1,700 a month, meaning that you need income of greater than $62,000 a year just to qualify for that unit. Okay, well, how many workers make less than 62 grand a year? There's a massive mismatch there in terms of what the population of earners is actually making for a lot of those frontline jobs. I mean, a lot of just jobs, period. And where are those houses in relation to those jobs? And then what are the inefficiencies in that particular home that you can take advantage of? So conversion of, if you have a formal dining room, as mentioned, or a living room and a den, or a finished basement, potentially with, as long as it has window egress. And there are lots of spaces that all of a sudden you realize, well, wait a second, if I can monetize that as an individual bedroom for a person who's working in this area, and offer it for even $600 a month, well, that's $600 a month that you would not have otherwise been earning. And so those typically make the most ideal properties. But on the whole, if you look at just the size of single family homes over the last 60 years, they've tripled in size. Meanwhile, you look at the demography of what's happened in our family makeup, household sizes, population, and that's come down significantly as boomers age, as millennials wait longer and longer to get married and start families. And so you have a lot of significant trends that have increased the demand for these single resident units, and there's nowhere for people to go. So that's certainly more prevalent in some markets than others. But when I first started, I thought it would be largely urban areas, and that turns out not to be true. I mean, we have homes out in the exurbs, particularly if you're in proximity to an Amazon warehouse or some sort of factory. And the reality is there's a housing crunch there as well. And so it can operate really well in a number of different use cases. But if you have any other questions, I would say for yourself and all your listeners who want to evaluate a model, get in touch with one of our reps, and they'd be happy to walk you through and figure out where the interest may be aligned and what we think may be a successful property for conversion.
Yeah, that makes total sense. My first thought, just as you're talking, was urban areas, right? Like, we both live in and around Atlanta. and my first thought is putting something in, Midtown or the Virginia Highlands or some of those like highly concentrated urban areas. But,
Yep.
as you've been talking, it's like I start thinking about the real need is probably, in Atlanta, more Roswell and Alpharetta and Marietta,
Exactly.
because that area is just starving for workforce housing. Like it just doesn't
Yeah.
exist. The average house size in Alpharetta, Georgia is like 3,600 square feet. And it's like,
Yeah.
you can't, and so it doesn't make sense to purchase those from a rental portfolio standpoint because the risk return is just not there unless you start thinking like you are, which is there is an Amazon warehouse there. There is, there's it's a massive data center. There's so much workforce housing needed. So, and I love the reframing of that. And if I'm a viewer today, if you're a Think Realty viewer and you're listening to this, I think, and you have a portfolio, I think you owe it to yourself to go to padsplit.com and check this out because I know I'm going to. I think it makes total sense. And with where we are in the economy today, we're going to have to get innovative. I mean, interest rates are increasing. Demand is still keeping the market pricing high. So increased demand, interest rates high. We're going to have to find, in this space, ways to find higher yield, and this is a potential one. So what the best way for them to get a hold of you or to get to the website is just padsplit.com and check it out?
You got it. Yeah, just click on padsplit.com. There's a label at the top for hosts, and would love to chat with anybody interested in hosting, and both making more money and making a difference in their communities. And the other piece I would add is it's not even just the people at the Amazon warehouse. It's like, think about your favorite sit-down restaurant in whatever neighborhood you're in and talk to people in the kitchen or some of the wait staff or the people bussing tables and figure out, wait a second, where can this person actually afford to live? And have conversations with some of those people, and you'll start to get your eyes open pretty quickly with what people are doing right now for housing options and how this can be a real opportunity in that community.
Yeah, that's a fantastic opportunity. Thank you so much for being a guest today. I think it brought a lot of value to our viewers. And appreciate all you're doing. I think there are very few real estate investors that are really focused on creating a solution to the affordable housing issue and crisis we have. So I appreciate that about your company and appreciate the effort that you have going across the country.
Well, thanks, Eddie. Yeah, it's all about both being pragmatic and being sustainable and really just adding value over time to all stakeholders
Very good.
wherever we can. So really appreciate the opportunity.
Awesome. Thank you so much. Have a great day. Think Realty viewer, if you are in the Tampa area, coming up in July 21st through 22nd, we have a Think Realty conference that we would love for you to be a part of. Set your sights on making the rest of 2022 and 2023 a success with more knowledge and know-how by learning and networking with top-tier real estate investment pros. For a limited time, you receive a buy one, get one deal on our Tampa tickets. Go to the website, register for 2 tickets, and put in the code podcast. Put in the code podcast, and then check out, and you'll receive a buy one, get one special just for you listening. You can go to thinkrealty.com/Tampa, thinkrealty.com/Tampa, and again, get your tickets for July 21st and 22nd. Florida is the hottest state in the union for real estate investing. Even if you're not in Tampa and you're in maybe the Southeast or you're considering moving to Florida, maybe you're in the Northeast, you're going to want to make sure to be a part of that conference. It's sure to be a good one. We've got some fantastic speakers. This episode is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. I want to thank you so much for viewing today and listening. It's been my honor to host this podcast. As the founder of Think Realty, I love to interact with you. We built this platform and this media platform for you, the real estate investor. I hope the interview with Atticus brought some thoughts into your head that are going to create innovation in the real estate investment space. Thank you so much for watching. Follow us on all the socials. You can follow me personally at Eddie Wilson Official, or you can follow us at WeThinkRealty.com, or I'm sorry, We Think Realty at all the different platforms like Instagram and Facebook and LinkedIn and Twitter. We're out there, so get involved with us. Send us in your questions, and make sure you continue to follow and share. Have a great day, and keep investing.